dividend investing in under 3 minutes. If you want complete passive income, dividends are the way forward. However, there is a huge downside with them, but I'll be explaining that in this video. First of all, what are dividends? Dividends are a sum of money, usually the profits of the company, that is paid out to its shareholders by the actual company.
Wow.
Companies can pay these dividends either annually, which means yearly, every quarter, so every 3 months, or monthly. It's important to note that each payout does not pay the full dividend price. We take Mack, for example, they pay a dividend of $2.04. They pay out quarterly, so each quarter you're actually going to receive a fraction of that. You will receive 51 cents. Now, what is a dividend yield? A dividend yield is just simply the percent of the dividend against that company's price, okay? So if we take a stock that is valued at $100 and they pay out $1 in a dividend, then that simply means that you will receive a 1% dividend yield. It is important to note that these dividend yields do fluctuate. They do go up and down depending on that actual stock valuation. Most dividend investors actually look for a dividend yield between 3 to 5%. Now, big companies such as Microsoft, Visa, Pepsi usually have a dividend yield between 1 and 3%. Now you're probably thinking, well, dividends are amazing. You just simply buy a stock, hold it forever, and you'll always receive a payout as long as that company exists, which sounds very, very good in theory. However, there are some downsides.
The worst trade deal ever made.
Companies can actually stop dividends at any time they want. However, they are unlikely to do that because dividends are more than likely going to attract those investors to that company. But as we can see within this pandemic that we've had this year, some companies have actually lowered their dividend payouts or actually completely stopped them. And the biggest downside to this is, if you take me for example, I am from Belfast, and if I wanted to stop working, I would probably need a salary of around 20,000, okay? Now if I wanted to receive £20,000 from my dividends at around a 5% yield, I would need a stock portfolio of around £400,000. Now obviously if my yield was a bit lower, so if it was around 3, then I would need much more, okay? And £400,000 is a lot of money. Now you can actually get there an easier way by using the snowballing effect, but that is for a future video. Guys, I hope you enjoyed this quick video on dividends. If you did, please give it a thumbs up, comment down below, click that subscribe button as well. It's a big red button down below, and I will see you in the next video.